Could Ethereum or DeFi take over the cryptocurrency space? Goldman Sachs say that Bitcoin is not an asset class. What? Those are going to be the topics of this morning's video. Good morning, everybody. Before we go into that, let's have a quick look at the markets. As you can see, we've got Bitcoin trading at 167,000 Rand per coin. If you're looking to pick up a gold coin on Altcoin Trader, we've got them trading around about 34,000 Rand per Kruger Rand, or per fine ounce of gold. If we have a quick look at coin market cap, we can see we've had about 19 cryptocurrencies added to the index since the last time I made a video last week. And we've got Bitcoin dominance at 66%. We've got Bitcoin back over the 9,000 US dollar mark, trading at 9,170 US dollars. Ethereum comfortably over the 200 US dollar mark at 207 US dollars. In third place, very interesting, Tether. It is, as I said last time, knocked XRP off of the third spot on CoinMarketCap. Bitcoin Cash trading at 232 US dollars per coin. If we look at the fear and greed index, the market's certainly settling down. We've got the fear and greed index at 41. As you know, 50 is neutral, and as it goes higher, it shows that people are more bullish or less afraid of the crypto markets. Now, with everything going on in our world, with the current pandemic, with the lockdowns, with the economic chaos that we are seeing, I guess a fear and greed index reading of 41 shows that people are not very scared of cryptocurrency, and it is something that people are looking at and excited about. Although we would like to see it in what I would consider the positive being over the 50. Why is everyone in crypto talking about DeFi? Now, I just wanted to bring to everyone's attention that DeFi is growing day by day. Ethereum is poised to move over to Ethereum 2.0. Now, a lot of people are probably underestimating the timeline and what is involved in this, because it is going to take some time, and I personally am not concerned. I believe it will happen, and it has been done in a very responsible way. So time for me doesn't really matter. I'm not someone that's pushing for it to happen. But as you know, we are going to be moving from proof of work to proof of stake. You need to have at least 32 coins to be able to take part in the proof of stake and earn a percentage of Ethereum every single year, or whatever the interval is that they're going to be paying out the Ethereum in the proof of stake algorithm. But more importantly, and something that is fascinating to me, is that we are seeing, because of the ease of use of the DeFi or Ethereum blockchains, and maybe it's a little bit of a stretch for me to start saying that Ethereum is DeFi, but certainly Ethereum contains most of the DeFi projects. But in order to have Bitcoin actually operate on these DeFi networks, we're finding people wrapping Bitcoin. Now, what is wrapping Bitcoin, you might ask? Bitcoin is not able to seamlessly move along the DeFi networks or along the Ethereum ERC20 token networks. So what people are doing is they are actually wrapping Bitcoin. In other words, you put up one Bitcoin and you get what is called a wrapped Bitcoin, which in most cases is an ERC20 token that has the value of one Bitcoin. There are a couple of problems with this, but of course there are a lot of advantages. Let's go through the problems that I see initially. First of all, you now need a third party that you can trust that will exchange this token you've got for your original Bitcoin. And that could be an issue unless it is resolved where it can be done in a decentralized fashion. But for now, we're trusting someone else, and unfortunately most companies are wanting to FICA you and take all your documentation, which could cause a bottleneck and could stop you from seamlessly moving in and out of the wrapped Bitcoin system. But the plus points or the pros on the system are, of course, that you can now swap wrapped Bitcoin, essentially Bitcoin, for any of the many tokens that are available on the decentralized exchanges, and you can move in and out of coins, giving you a lot of flexibility. Now, the main principle to understand here is that Ethereum's functionality is so good that they are engulfing Bitcoin, and that, I believe, is a sign of what is going to happen in the future and why DeFi is going to be so strong and why we need to watch the Ethereum space, the DeFi space. The amount of developers working on DeFi, as I often say, is mind-blowing, and this is a network that has real-world use cases. I explained in one of my videos how I actually managed to buy a property using DeFi, breaking away from traditional banking, bonds, loans, and actually managing to acquire and now own a property just by using decentralized finance. If you're interested in that, I will put a link to that video above. Now let's talk about Goldman Sachs. Goldman Sachs analysts are not buying into the idea that Bitcoin or any cryptocurrency should be seen as a worthwhile investment for their firm's clients. I have no problem with that. Goldman Sachs are certainly entitled to their opinion. I simply am no longer going to believe in gravity. But that doesn't mean that I'm going to be floating off the planet. In fact, gravity does not care whether I believe in it or not. I'm still going to be bound to the laws of gravity and the laws of science, and that is going to keep me firmly based on this planet. In the same vein, Bitcoin doesn't care whether Goldman Sachs believes it's an asset class or not, or a worthwhile investment. It's not going to take away from the fact that Bitcoin is one of the best performing assets and has been for many, many years. It's also not going to take away from the fact that Bitcoin is going to continue to behave and act as sound money. So regardless of what Goldman Sachs say, it doesn't change the fundamentals or what Bitcoin is. Now, one of the things that I get frustrated about is the fact that if you are a YouTuber and you give advice, you could land in trouble if that advice doesn't work out exactly as you thought it might. But big institutions like Goldman Sachs, like the banks, have no consequences for anything they say. If Bitcoin had to become a really well-respected asset and was an amazing investment and went over the million rand mark, which I believe it will do in years to come, they would not be held accountable for making statements like this. In fact, it gets so crazy that you would probably find, and I'm not saying this is a fact, it's a probability, that Goldman Sachs will turn around and say, oh, and we bought Bitcoin just in case, while advising others not to buy it, and now they're wealthy. That's how these institutions get to be incredibly wealthy. They don't have to be accountable for their opinions. The only accountability is, of course, that they might get less investments if they made a call and it was absolutely wrong. But just because they say that doesn't mean that they're not buying Bitcoin. It also, of course, doesn't mean that they are. Let's have a look at what they say further. Goldman Sachs say that the danger of hacks, other losses related to cryptocurrencies, along with their use to, albeit illicit activities, are all liabilities for crypto. Goldman Sachs conclude that cryptocurrencies such as Bitcoin are not an asset class. Okay, now let's just think about some of the things that they say and read this. Inherent lack of cash flow. Okay, that could mean, in my mind, three things. First of all, that Bitcoins don't generate cash. Second of all, maybe Bitcoin is not liquid and you can't get in or out. And third of all, that which bleeds into the second point, that it doesn't really assist in earning or assist in the economy. The first and third points sort of bleed very much into them. So let's just break it down and go through this. Inherent lack of cash flow. I know, and I think a lot of people will certainly agree with me, that Bitcoin cryptocurrencies are one of the most liquid assets. You can move in and out of Bitcoin and cryptocurrencies with very little friction, very little effort. So that point, if it is about liquidity and the ability to move in and out of the markets, should certainly be mute. Let's bleed into the second point because it sort of goes to what I said earlier. The inability to generate earnings. Now, if they mean that it doesn't contribute to the economy or doesn't deliver anything or doesn't have intrinsic value, maybe I'd like to put this spin on it. The banking sector also should have the inability to earn money. But wait, we know the banking sector is one of the most lucrative sectors in the world. So with Bitcoin aiming to take over the banking sector, which I don't believe it will in our lifetime, but certainly cut out the middleman, Is it not obvious that it would fill the same role as a bank? Is it not obvious that if it doesn't earn money, it will certainly save money for the investor, and thereby, once again, making that point not really a valid point? Volatility. Okay, let's take a step back. Now, traditional fiat or traditional currencies are not volatile, but they are in a continual downward spiral. So is that a good thing? I certainly would take volatility over a currency that is continually being inflated and being worth less and less decade after decade. I would take volatility over that if something would go up occasionally. So I don't think that volatility is a bad thing. And let's bear in mind that cryptocurrency is in its infancy. Bitcoin, only 11 years old. It has to find its place in the market. It has to find its way in the traditional financial sector. So I think volatility is not going to be going away in the near future as Bitcoin tries to claim more and more of the traditional financial system. It does need to go up. And of course, with big uptrends, we see big downtrends. Volatility is going to be here for a while, but it's all part of the growing pains of cryptocurrency, of Bitcoin. Now, with the logic of Goldman Sachs, if it looks like a duck, if it walks like a duck, if it quacks like a duck, it's probably a cow. That's it from me. I'm out.